Let's start with Bill Baruch, president at Blue Line Futures. Bill, good to have you here on the watch list. Let's talk WTI first. Are we just stuck quiet in this range? Is there a breakout on the way? How long do we stay here?
This has been a very technical chart. I mean, a capitulation back in April, and this thing ran up. Where we find ourselves is the March 6th, where this thing fell apart, and the market is struggling to chew through there. But at the same time, it's had a big run. I see very little value trying to chase crude oil higher, given that the ceiling, whether it be 41.5 or the September gap at 42.5, is very small at this level. I think the value in the market is going to be seen lower. But with all of that said, the path least resistance is higher, and you can't really fight that. So $34 would really be my great target. I'd love to be a buyer in WTI. 37, 37.5, you may have to settle with if the fundamentals continue to improve.
So what are you looking for here is that kind of marginal catalyst. It seems like the OPEC stuff is pretty stable, pretty solid. It's kind of like the Fed and stocks. There's not a lot of surprises. It apparently has some degree of put effect. So what are you looking at that really matters for WTI on the incrementally bullish side?
Well, OPEC did a great job working to rebalance the market, and then the news last week. I mean, the market was prepared for that the production cut taper. They got through it very well, and then ultimately, there's a couple questions that are budding out there. And here in China, just due to floods, there's a lot less demand right now. But they were massive buyers, along with India, through the last couple months. And can they sustain that buying, given right now that inventories are basically at record levels in China? So, yes, last week's news, year-over-year, quarter two GDP, better than it was at 3.2%. They are back to growth. But a lot of this is getting priced into the market. So from here, the next question is, do we start to see U.S. production come back online? And that news today, we got Chevron with buying Noble Energy. It starts to allude to some progress amid the energy sector, and that production is going to come back online. Just we don't know the timeline for it right now.
That's kind of what I was thinking too. Maybe like a first stage of progress. There's been a lot of bearish narrative coming out of this entire crisis for oil. People are watching the Teslas and Nikolas, everything to do with electric vehicles run wild. Solar stocks are going nuts. Is this trade due for a big reversal? I want to get your thoughts real quick, Bill, before we bring in our next guest.
Listen, I'm the last person to really be chasing the high-flying names. I like to pick my spots, know where I want to be a buyer when things come back. So, again, crude oil, if we're going to focus on that right now, I really want to be a buyer at $34. I could convince myself to be a big buyer at $37 if the fundamentals continue to improve. Being that, we start to see the U.S. data, it's not just a big jump back or snap back right now, but we continue to improve. Remember, these numbers that we're getting right now are numbers compared to just absolute dismal zero demand. So it's given that we're starting to see some of the demand bounce back, but can we sustain growth upon the previous economic data that we've already had?